All right. Hello, everybody, and welcome to Invest in Education Academy's podcast. We have a very fun show for you all today because we're going to talk about Microsoft's acquisition of Activision Blizzard. So, for anybody who's been following IEA, I think it was like 2020, we were big on gaming, and Activision Blizzard was one of the stocks that we were big on. So, hopefully, you took heed back then and you got a little bit, but if not, it's cool. We're going to talk about it today, and you're going to see, is there an opportunity or has the opportunity already gone by? So while Leon tells you why we chose this topic, I'm going to do some housekeeping.
Yeah, so if anybody doesn't know what happened yesterday, so a big seismic shift happened in the tech world. So what happened yesterday was Microsoft came out of nowhere. There was no leaks about this. Wall Street was taken aback. Usually these things, they're like whispers, but nobody knew this was happening. Microsoft announced that they are buying Activision Blizzard for $68.9 billion. So we'll just say $70 billion. $68.9 billion or $70 billion Microsoft is buying Activision for. Now, question is, why do you care? Right? Why should we care? So inside the IA platform, we posted about this yesterday. We had some conversations going back and forth, and I thought one of the conversations that came up was kind of an interesting moment, right? So one of our members, shout out to Kunli, let me just break down the deal. So what's happening is Microsoft is buying Activision Blizzard for $95 per share, right? So that when you take all of Activision Blizzard's shares, add them together, times 95 equals $68.9 billion. So the number they're going to be bought out at, as far as the stock price, is $95. Activision before this announcement was trading, I think, in the low 80s or high 70s, or maybe below.
It was in the 70s. It was
70s. It was trading in the 70s. So Microsoft is buying. So the stock is trading at around, let's just say, the mid 70s, and Microsoft is buying them out at $95. So that's a huge premium that they're paying for the company, right? So one of the members, shout out to Aubrey. Aubrey came on and was saying how he posted that that he'd actually sold his Activision Blizzard position on this announcement of this merger, in the stock yesterday. Activision Blizzard stock popped 30% based on this news. So Aubrey, being the keen guy that he is, he sold his Activision position.
Oh, hold on, and Leon, one thing. So for those of you all who are thinking, it popped 30%. The market, can you compare that to the market, Leon, over the course of a year?
Oh yeah. So yesterday the Activision stock popped 30% in one day. And remember, people that don't know, the stock market on average per year returns 10%, 12% roughly with dividends. So in one day, the stock went up 3 times the market typically does, right? And like I said, Aubrey, being the keen investor that he is, saw that pop and was like, "I'm gonna take my money and run." So he did. He took his money. I'm not sure if he sold his whole position or some, but he took some money off the table based on that 30% pop. So another member, Kunli, chimed in, was asking the question, why would someone sell their stock at, let's say, 80? I think the mid 80s were when it jumped after the announcement, when you could eventually get $95 once the deal goes through for it. So the shareholders will be bought out at $95 per share. And the answer is, this is the biggest, if it goes well, this is the proposed biggest tech deal in the history of technology. Basically $70 billion. And anytime you have deals of this size, it has to go through the Feds, Congress. It has to go through regulatory
SEC, approval. SEC, fair
Commerce.
The IRS. And so you got to think about this. Even for it to be qualified by the IRS, and the IRS is already behind and understaffed, and you're coming off COVID, this deal could take years to get done.
The head of the what is she? Commerce. I think she might be head of Commerce. I'm blanking right now. But one of the heads of the major bodies that are going to review this deal, she came out yesterday and said they are crazy understaffed. Like, they are way understaffed, and they already have deals that they're looking at already on top of now the biggest technology deal in the history of tech. So this, the approval of this. Oh, just to give an example, So for people that don't know, and people may know, AMD is right now is buying Xilinx. And AMD is a chip company, semiconductor company. They're buying Xilinx. This deal has been in the works for over a year. It was supposed to get, everybody said it would get approved last year. It's now bled into this year because of regulatory approval. When you're dealing with the federal government, things just naturally go slow, especially when you're understaffed. So this has taken over a year now for this deal to go through. Will it go through? We don't know. Like we don't know what deal is going to go through until the feds say yes or no. So back to Activision and Microsoft. Aubrey took his position off, and Kunle was saying, "Why'd you do that?" One of the reasons that was smart is because nobody knows, Aubrey in particular, none of us know if this deal is going to go through, right? So Aubrey saw a 30% pop in Activision stock yesterday. He took advantage of that, took that off the table. Now again, I don't know if he took all his position or some of it, but let's just say he took all of his position off. And I know he's been in Activision for a while, so he was profitable before that. But on top of what he had before, he had a 30% pop, right? Awesome, right? Now again, why would you do that? Because again, we don't know if this deal is going to go through. Right now, the feds, and especially these regulatory bodies, are very, 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 very anti-technology, and they're anti kind of monopolistic big companies. Like Facebook is under huge scrutiny right now. Twitter is, for kicking Trump off and all his people. Facebook with the whole, during the year of the election, all the fraud that went on there. So there's a lot of scrutiny right now in Washington on technology, and there's no guarantee at all that this deal will go through, especially being as large as it is. And also the Democratic Party that's in power right now, they're very anti-centralization of power, or centralization of market power, I should say, where a company can control a significant amount of any particular market. So Microsoft buying Activision for $70 billion is a huge deal. And again, we don't know if this deal is going to go through. We may not even know for a year, maybe longer than that. So Aubrey selling his position was actually very smart because he took 30% pop in the stock, took it off the table, and probably chilling with some drinks or something somewhere based on that. So that's one thing. So that's an example of anytime you see a deal or anytime you see a big pop in a stock, and if it's surrounding like a merger or acquisition, and later that if the deal goes through, you may get a higher price per share. You don't know if that stock is actually, you don't know that deal is actually going to be approved. So it's always a good time. It's always a good decision when you see a pop in a stock to maybe take some of the
there's another thought there too.
Mm-hmm.
Yeah, no, I was going to say it was called a stop loss on it. So if your concern is locking in that 30% gain, there's still another 15-20% possible in the stock. You can do what's called a stop loss. And stop loss means that if you enter a trade, it does not trigger immediately, but it says if the share price falls below whatever your stop price, it prevents loss beyond that. So that's the best way I can describe it. And you put in a stop loss, and you put in a stop loss at $82 when it's at $83 right now. If it slides below 82, you're looking at maybe a 27% gain versus 30. But if you have a stop loss and it goes up to, let's say, $87 per share, you actually can then choose to move your stop loss up to $86. And so now that means that you were able to capture another 4 or 5%. And you can keep doing that all the way up to hopefully the $95 range. Another thing you can do if you're out there and you're thinking, well, how do you protect yourself? In which I agree that protection is important, but then I'm a little more aggressive and I want to wring the towel until all the water's out of it. So what I would do is probably put in what's called a trailing percentage sell order. And you can do a trailing percentage sell. And it says that if any point in time the stock falls 8%, 5%, 2% below its highest number, it triggers a sell automatically, which means you don't have to watch it every day. But that also means that every time it goes up, it's resetting your slide back by whatever the new number is, 2% below that. So if it's 100, it's going to be 90. If it goes to 102, it's going to be like 99. If it goes to 104, it's going to be roughly 101. And so there's ways to protect yourself without having to just sell it, just so you all know. Our job is to educate you. I do not disagree with Aubrey's, pullout, but I am saying there are ways to protect yourself and still see if it's upside potential.
Yep. So this is one example of if you're ever in a stock that has a merger or an acquisition announced and it gets a big pop, but say part of that deal says, okay, they're going to buy out the company at say 20% higher than the current stock price. Don't assume that it's eventually going to be bought at that price, because again, if it's a big deal and the regulators say that it's too big, too much market power, they can nix the deal and you'll never get that price. And then when that happens, typically the stock of the company that's being acquired, it typically tanks.
And also too, they can just have disagreement. So just understand, when I believe it was Tesla was talking about a possible working relationship with Kia, everybody on Wall Street thought it was done. Like the ink was drying on the paper. It was not. And I'm talking like 2 weeks or something before they announced the big partnership, the deal was over. And people were buying on the news. We talked about that before. People buy on the news. And oftentimes that's not a good way to invest. Now, again, for this deal, there's several deals we could talk about that were started but never went through, but that's kind of irrelevant. Leon's point that this is not guaranteed is what you need to remember and what you need to walk away with.
Yep. So, and as we would say, no one ever gone broke taking a profit. So that's always a good thing. The other point I want to make about this deal is that, so the headline term, or the headline ness of this deal is that Microsoft is paying $70 billion in cash. Like there's no swap, there's no stock swap. Like there's no debt involved. Microsoft is going to their bank, essentially, theoretically, it's not really a check, but they're writing a check for $70 billion and going to hand Activision a check for $70 billion. Just think about I looked it up before it came on. Like they could buy, who was it? Chipotle and some other company. Basically, they can buy 2 or 3 companies, big companies that we know, big brands that we know, and still be below $70 billion and not even touch $70 billion on some big brands. That is a ungodly amount of money, right?
Oh, they can buy countries.
Yeah, that's more money than some countries make. Their
GDP
is, the GDP is like by a lot. So $70 billion is a massive amount of money. So the reason I'm bringing this up is, a lot of people, during this, so right now the market is going crazy, right? Y'all know we're going through a lot of turmoil, a lot of volatility in the market. And the question is, what should people be buying? Headline. You should be heavily researching, because we always say do your own research, but you should be heavily investigating Microsoft, right? Think about it. This company is about to write a check for $70 billion and not bat an eye. This is not going to affect their business. This isn't going to affect anybody's salary. This isn't going to affect the way the company operates. They're basically, so I actually saw yesterday, this is Microsoft in the bank right now. I think it has $140 billion in the bank. $140 billion. Now imagine how much money they're making just off interest alone. I mean, if they're making 0.05%, the national average for savings accounts, they're still making like $10 million a day or something crazy, right? So the money they have in the bank right now, it's like $140 billion in cash in the bank. From that, they're taking $70 billion of that to buy this company. That's roughly, what is that? Well, give me do the math, Brent. 70. What's that percentage?
But 140 is 70.
That's was that double? Like half?
It's like 50%.
Like 50%. Yeah. So Microsoft's taking 50 right now, roughly 50% of their cash and buying this company, right? And not batting an eye. Why? Because they know in the next day, 2, 3 days, 4 days, month, year, they're going to not make back like 70 billion, but they're going to. I mean, Microsoft literally makes I think tens of millions per day.
Yeah.
In revenue.
But Leon, I'll say this too: like what you're saying about Microsoft is the same reason I'm looking at these gaming stocks even harder. So for me, my thought was, okay, if they were willing, and sometimes these companies, let's be very clear. And I'm not saying this is what they're doing. So this is IAA saying this is just a thought and opinion. This is not gospel. But sometimes these companies, they get these big wigs at the highest level who are ahead of the information. and they have their networks. Not saying this is happening, but their networks can get ahead of these this news and trade certain kind of ways. And I'm just keeping it vague on purpose. Everybody fill in the gaps. And so if they're trading a certain kind of way, and maybe they already know a deal is going to or not going to happen, they can trade ahead of the news. And what happens in some of these cases, retail investors, you and I, get slaughtered. And so this is going back to what Leon actually did say about pulling out the profits. Nobody's ever gone broke that way. That's very true, because you don't know what they know at that level. You just don't. And if all of a sudden that deal is done and the broader market catches up to the news and then they start a sell-off, oftentimes we're not checking our accounts every day. And all of a sudden we look, and that 30%, not only is the 30% gone, but now we're looking at another 30% beyond that 60% reduction in the stock price because it just fell flat. Again, we're not saying that will happen. We're not saying there's any manipulation occurring. We are saying that you cannot get hurt if you pull out your profit. Right. And we are saying that this is an environment with, I don't even think the NVIDIA deal has gone through yet. And this is a deal that's been like 2-3 years going.
Yeah, that's actually a good point. So NVIDIA is buying another company called ARM. And this has been, I think this is going on a year and a half, maybe 2 years.
No, it's two. It's a solid two.
Solid 2 years. Solid 2 years. This has been dragging on. And the thought now is that the deal will not go through. I think the EU or one of the Asian regulators already said they don't agree with it. So most likely this is not going to go through. So just think about that. If you were sitting in this stock, I mean, NVIDIA's real quick. NVIDIA's killed. Yeah, NVIDIA's killed it the last. Yeah. So So NVIDIA is my number one winner the last year and a half. So but this is all theoretical. So let's say you were sitting in NVIDIA, and stock had moved, or like in the case of Activision Blizzard, it had popped, and then now you're kind of waiting around for this deal to go through, and it never goes through, right? You would, and let's say the stock kind of trickled down, you lost that profit. So that's an example of where that could have happened. Where again, if you get a huge pop in the stock like that, especially based around a deal that may or may not go through, it's always good to take the profits, at least some profits off the table. And like I said, the other point is that if you're looking for a company to buy, there's no better company to buy than a company that can write a check for $70 billion and not bat an eye. That shows you how strong a financial position that Microsoft is in. The company is now worth roughly two and a half. Well, I think the high has been. So let's say the company is worth $2 trillion. $2 trillion, and they're writing a check for $70 billion without batting an eye. So if you're looking for a stock to buy, I would say take a hard look at Microsoft, and if you can, maybe put some money to work. But I bought some more. I actually bought some more Microsoft on the since this pullback has happened in the market. Microsoft's one of the stocks that I've actually I already own it. I've added to my position because it's Microsoft. Then when I heard this deal, I'm kind of tapped out right now as far as putting new money in. But when I can, I would buy more. When I saw the fact they can write a check for $70 billion and not bat an eye.
Yeah, and so for anybody who's thinking, okay, so what do I do now? Like, do I go get Activision Blizzard? Do I go get Microsoft? Do I sell everything? You have to do your research. Just in summary, some of the things you can do in this market is increase your position in Microsoft, maintain your position in Microsoft. You can look at Activision Blizzard to do a stop loss, which, I think a stop loss is really smart. You can have a percentage trailing sell put in. You can actually just sell it. And so you got to think about, what are the things to consider when doing that? What's your tax obligation if you do it? Are you looking at short-term capital gains, long-term capital gains? How does this affect your overall portfolio? What are you going to do with the money if you do decide to sell? All these are very important. And to note, if the deal doesn't go through, it's not as if there's a lot of companies out there that can just drop a $70 billion check. So it's not going to be a bidding war for Activision. It's not going to happen at this price point. So if this deal doesn't go through, it's a high probability Activision goes back on the shelf until, maybe an Apple, comes along and says they're interested now, or Amazon. But again, there are not many companies that can produce that type of buyout. So don't think if this doesn't go through, somebody else will come along and buy it because now people are interested. That's not how this thing works. And so we just want you to be clear on that. And we know that we owe you some things. We owe you all
Well, hold on. Real good that point, Brent. Last point. Brent makes a good point. The industry, right? So the talk on Wall Street now is that okay, Microsoft is buying Activision for $70 billion. Does that now put Roblox in play? Does that now put like Zynga? I don't know if a lot of you have heard of Zynga. Zynga right now, I think Zynga right now is being bought out. I believe by Take Two Interactive. That's another gaming company that's being bought out.
And that's another one that we picked. We picked Take Two Interactive back in 20. It might have been 2020.
Yeah, we've been on the gaming like the last 2 years pretty strong. But say all that to say, look at one thing you may want to look at now is gaming stocks, right? Because so what Wall Street is saying is that what Microsoft did was lay down the quote unquote the gauntlet for the metaverse, right? You know, everybody knows this term metaverse. It's been hot since Facebook changed their name to Meta. They're saying now it could be a bidding war because now Microsoft has now owns Activision. So now they're saying, okay, you may have Apple, like Brent said, you may have Facebook now go out and try to buy like a Roblox. Another one is Unity Software. They actually make the tools that a lot of these companies use to make these games. So that's another play. So looking at the gaming space could be kind of smart right now because it's hot based on what Microsoft has done. But I will say, remember the environment we're in. Rising interest rates. If the company does not have any profits, you may want to trade. Go small or don't do it at all. Or look for companies in that space that do have profits. But the gaming sector industry right now, is probably going to be a bit on a lot of companies' radars just because the deal by Microsoft is so big and could be so consequential.
Yeah, and I think right now for the gaming industry, just me personally, I would lay low for about 2 weeks until the smoke clears because you're going to get a lot of hype, like that AMC kind of hype of people buying in thinking, oh, this is the next big thing. And when everything shakes out and people realize there are not a lot of people that can write these huge checks and these companies aren't just exploding, it's going to be a mass exodus of people who really need that money, who were hoping that it was going to pop. So just be careful. Understand what your goals are, protect your positions. And if you want to talk about it further, join IEA. And you can join IEA by going to www.iaamembers.com. And membership there is available. You can purchase it, and we can have this conversation inside the platform. However, Leon and I have never been hoarders of information. So if you join the Facebook group, as much as we can, maybe in less depth, but we will no doubtedly, have that conversation if you want to at our Facebook group. And you can search Investing Education Academy on Facebook, and we will show up. I think we're over 400 plus members in the group now, and it's
approaching 500. Mm-hmm.
Yeah, and then our Instagram has probably increased by about like 60% over the last
80. It's up to like 80% the last 2 or 3 months.
So you all are definitely checking in. We appreciate it, and we are providing the content because we want the community to be better. We want those who are disenfranchised from the financial markets to no longer feel like it's not something they can do. So with that being said, we will give you all our 2 stock picks. And to receive them, you can get one in our Facebook group. And again, you can go to Investing Education Academy on Facebook, and we will pop up. And if you are interested in seeing what the 2 picks that we have, you can actually join the platform and go to www.ianow.com and join the membership platform. Or if you're already a member, log in, and between today and tomorrow, you'll be able to see our stock picks. So with that being said, thank you for being with us, and we will see you all next Wednesday.